Is the EURJPY about to soar to new heights, or is it teetering on the edge of a major drop? The market is buzzing with activity on this popular pair, and today we're cutting through the noise to see what the charts are telling us. Looking at recent market analysis, we're seeing a fascinating split in opinion. There is no clear consensus, which often means a significant move could be on the horizon. It's a classic tug-of-war between optimistic buyers and cautious sellers, creating a tense and volatile environment. Let's break down the two sides. First, the bull case. Traders on the long side are pointing to signs of underlying strength. A notable bullish hammer pattern has formed on the 4-hour chart around the 172.00 level, which suggests that buyers are stepping in to defend this price. We're also seeing technical indicators like the MACD signaling a potential move up. Buyers are looking for the price to find support and are targeting a push towards the resistance level at 173.40. However, the bears have a strong case as well. Some analysts are zooming out, noting that on the weekly chart, the pair appears overbought, hinting that a correction could be due. We are seeing significant selling pressure emerge right around the 173.00 to 173.20 zone. Several traders have successfully shorted the pair from this area. For sellers, a key trigger would be a decisive break below the critical support level of 171.50. If that floor gives way, the door could open for a much deeper drop, with some eyeing targets as low as 168.50. So, what are the key takeaways from all this? EURJPY is currently locked in a high-stakes battleground. The price action is contained within a key range, defined by resistance near 173.20 on the upside and major support around 171.50 on the downside. The bulls need the price to hold above current support and ultimately break through that 173.20 ceiling to continue the uptrend. The bears are watching for that ceiling to hold, hoping for a breakdown below 171.50 to confirm that a larger sell-off is underway. This volatility has also created opportunities for nimble day traders who have found success playing both the short and long side within this defined range. In conclusion, the current situation in EURJPY is a textbook example of market indecision at a critical technical juncture. The direction it breaks from this consolidation will likely set the tone for the next major trend. Keep a close eye on those key levels.